This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, April 27th, 2016. Euro dollar. So although we've seen a bit of a bounce in the euro over the past couple of sessions, the recent breakdown below 112.34 does suggest that the market is going to put in another lower top ahead of the next downside extension towards next key support at 111.45 further down. At this point, look for any rallies to be very well capped towards 114, with only a break back above that recent 2016 peak at 114.65 to compromise the bearish outlook. Sterling dollar. So cable has seen some impressive gains in recent trade, with the market taking out some key short-term resistance at 145.15, and this opens the door for a test of some more critical resistance further up at 146.68. A break above 146.68 would suggest that the market is putting in a more significant, meaningful bottom and could open the door for fresh upside extension back towards 150 in the sessions ahead. Inability, however, to clear 146.68 or establish above 146.68 would suggest that the market is poised for another topside failure ahead of a fresh downside extension, potentially all the way back down towards those recent 7-year lows at 138.36. Dollar yen. So although dollar yen has recently broken back above that previous base, that 2016 base at 110.67, rallies have been well capped, and the market still remains confined to a broader downtrend while it remains below 114.87. At this point, there's still risk for a lower top ahead of the next downside extension back towards the recent lows that we saw, those 2016 and multi-month lows at 107.63, and towards a measured move at 106.50. Euro Swiss. So Euro Swiss has been very well supported on dips down towards 108, and the market is looking like it wants to break back above some recent short-term resistance at 110.24. A break above 110.24 would then open a fresh upside extension towards 112, above which exposes 115 further up. Inability to establish back above 110.24 could open the door for another test of that recent range base around the 108 area. Aussie dollar. So Aussie is under some pressure today, with the market stalling out recently at the fresh 2016 high 78.35, and now looking like it wants to accelerate back down towards the recent support that we saw, key support at 74.77. A break below 74.77, that low that we saw back on the 24th of March, would really be required though to confirm or strengthen the bearish outlook and accelerate declines. Until then, there is more risk short term for some form of a higher low and fresh upside back above that recent 2016 peak at 78.35. But right now, again, with the market rolling over on Wednesday, there is risk for this to accelerate back down towards that critical support at 74.77. Dollar CAD. So dollar CAD continues with its declines off those January highs, with the market now trading down towards next key support, a measured move at 125. However, additional setbacks beyond or around 125 should be limited, with the market having been stretched after trading under so much pressure since January. Look for some form of a short-term base over the coming sessions in favor of a fresh bounce, but a break back above 129.90 would be required. That's the high that we saw back on the 18th of April to take the immediate pressure off the downside. Kiwi dollar. So Kiwi has done a good job pulling back after a fresh 2016 high above 70 at 70.54, but the market's going to need to take out 67.59 to strengthen the possibility for a bearish resumption and acceleration back down towards next key critical support at 65.46. Inability to take out 67.59 will keep the more immediate pressure on the top side. SPX 500. So the S&P 500 has been showing signs of exhaustion in recent trade after an impressive rally out from those 2016 lows from February at 1808. The market has stalled out at this point at 2112 and could be poised to roll over. Look for a break and close below recent support that was seen on the 18th of April around 120.65 to strengthen this outlook and accelerate declines back towards next key support below there at 2021. Gold. So gold has been consolidating in recent trade, but the consolidation is classified as a bullish consolidation following that impressive break several weeks back above some previous resistance now turned support in the 1190 area. Look for this consolidation eventually to push above the 2016 high in the 1280s and towards the 2015 peak at 1307 further up.